And we are live. Hey, what's up, guys? Welcome back to the FreshandFit Podcast, man. Today's Money Monday. We got in a special episode with our boy Steve from accounting, our accountant, guys. We're going to give you guys some secrets as far as tax planning and starting your own business. Let's get into it. Hey, what's up, guys? Welcome to FreshandFit Podcast. It is Monday, aka Money Monday, man, and we're glad to be back, guys. Hope you guys are. You could be anywhere else in the world, but you're here with us. So, quick announcements, okay? I know you guys probably want to know how was LA and everything. Fresh, you want to take them through how LA was real quick? All the people we met and everything.
Man, I ain't gonna lie, like for networking, LA is pretty dope, but Miami is where it's at because to be there that long, bro. That many people is awesome, but Miami is home, man. Like Miami is where it's at. But I love LA though. That being said.
Yeah, so we met a lot of people there, man.
We met like Aiden Ross, Zias. We met Real Luis Mercado. We met who else? A bunch of people.
Yeah, obviously Mr. Organic, tall guy. We went and did the No Jumper interview. We did 2 interviews with them. The original one we did just got posted today, and then the live stream we did with AD and his squad.
We met Trey Songs, OT Genesis, all those people, man.
Yeah, met a lot of people out there, guys. LA is really definitely it's a whole other world out there, man. You know what I'm saying? So we're thinking about possibly making a studio out there. And, having a FreshandFit West Coast version.
Steve, tell us about taxes.
Let me know, guys, if you... and we're going to talk about some of that with structuring with our boy, Steve. So real quick, patreon.com/FreshFit, guys, where we put all the behind-the-scenes content. And we have a weekly Zoom call every week. We'll have that call this week. Obviously, we're in LA last week, so we couldn't do it. But we're going to do it this week, typically every Sunday at 8 p.m. And we talk about everything, money, girls, social media, everything else like that. Also, we're on Spotify, Google, and Apple Podcasts, every single podcast platform you listen to. We are there. Check us out. The anchor link is below, and it'll take you to whatever podcast platform you like to listen, including the smaller ones. Also, merch, guys, FreshandFitPodcastStore.com. We're restocked, as you guys can see. I got a redone Punisher shirt, right? And then on the back, it has the Sims to Pimps. Chris, can you hit like 3 or 2?
Yep, I think it's 3. Actually, nope.
Chris, a little rusty, guys. Give us a second here. Oh, it's because you switched it. Okay, never mind that. So it's behind here, guys.
If you want to zoom in, sign up. You're gonna.
Well, it's a normal logo. It's normal. And then
they got hoodies too, man.
Yeah, and then we got hoodies
in LA.
As well.
We were cold as hell. Put some hoodies on. We were fine.
Yeah. So yeah. What else? And then so the merch is there, and then also, guys, Fresh's vlog channel.
Chris, could you bring it up real quick, bro? So guys, we did a bunch of stuff in LA. If you want to see the recap live on YouTube, we vlogged pretty much everything that we've been through, like going to the club, meeting influencers, YouTubers, celebrities, rappers, everything like that is on the vlog channel. So check it out real quick. It's up to 50K on the way.
And then, guys, we're also live on Twitch right now, twitch.tv/FreshFit Podcast. And then, Chris, you want to tell them about your Twitch?
Yeah, sure, fam. Guys, follow me on Twitch on RMC Poxon. I was streaming all week last week, and shout out to you guys for supporting. I hit affiliated last week. Shout out to support for that. It's Don DeMarco for you guys for following me and donating and stuff like that. So follow me, guys, on Twitch. I will be streaming more gameplay. Let's get it.
All right. And any Instagram ideas, any ideas for the show, guys, hit us up on Instagram. And then I'll hit the super chats real quick, and then we're going to introduce our guest, man. We got a good show planned for you guys tonight, man. Because we've been getting this request quite a bit as far as starting up a business, LLC, S Corp, tax planning, everything else like that. Chris, you got him?
Yeah, sure. 1 second. Okay. Shout out to new members, by the way.
Oh yeah, shout out to new members. Christian, thank you so much for joining. We got Travel Big Shot. Thank you so much for joining.
Junior Bell,
supporter. Thank you so much for joining. And then Rep the King Ace. Thank you so much.
And Luch for joined.
And then
Lelouch
the Savage. Thank you so much, man, for joining. And then shout out to our boy Travel Big Shot. That's an executive level supporter. Thank you so much. And then Mr. Homer Canadian. And then we got Samir Walke. Thank you guys so much, man. The FreshFit fam is growing every single day, despite some haters. Okay, so real quick here, we got All right, we're refreshing, guys, and we're gonna read these chats off, and then we'll get into the show. And thank you guys so much for bearing with us. All right, we got TLA in the building. We should do a live show. FNF, Jameson, James, Corey game. We got Goose's Land. Y'all made y'all rounds in LA and did y'all thing. Welcome back. Thank you so much, Goose Land. Goose, I saw you in the comments defending us, bro. Thank you so much, man. I saw you like out there, like just like smacking the haters around. Mo Rizzo, $5. Welcome back to the #1 podcast, ready for Money Mondays. Absolutely. Reginald Debra, should I use my credit cards to pay rent? If you can get away with it, do it, and you don't get hit with like a bad transaction fee. $10. Gotham NYC just started reading Set for Life. Thanks for the recommendation. Any other good books? Also, guys, how hard was it to make your first $100K? That will be answered today. So, Steve, for the people that don't know you, man, can you introduce yourself to the people? You're our accountant. We obviously trust you with our life to include our name, social security number, penis size, and everything else. Can you? Can you tell that was a joke, by the way, guys? Anyway, can you tell the people who you are and what you do?
Absolutely. I don't know if I would trust you, trust me with your, but definitely you can trust me with giving you the best advice for your tax savings and staying within the legal limits and so forth. Yeah, basically, I know I've been on the show before. I think when you guys first started back in February, I think.
It was either late last year or early this year.
We were under 100K.
Yeah, way under.
Yeah, so I'm a CPA here. I'm located in Florida on the West Coast, and I mainly deal with small business clients, high net worth individuals, a lot of real estate investors, and basically I've been doing this for going on 20 years now. And I've got 2 practices, one in Bradenton, one in Sarasota, and that's about it. Yeah, I've also been a business owner too. Can
you tell people like what kind of businesses you had in the past?
I had a medical portable imaging X-ray company for quite a while in the state of Florida, and then we sold it to a national, like a multi-state. They were like in all 50 states, so they bought us out back in 2012, and then I went back into CPA, started acquiring some practices, and built my business up from that. And then I'm also a heavy investor in real estate too as well.
Okay. That's awesome. And as you guys can see, and you've been doing this for a while. You're originally from New York, right?
Yeah, I was born in Manhattan, but I grew up in upstate New York, and I've been down in Florida for about 20 years.
He's a New Yorican, guys, by the way.
Yeah, FYI. New Yorican.
Steve from accounting in the house, man. Yes. So Steve, for people that I guess we could start with running like starting a business, right? We get one of the top questions I get, which is why we brought Steve on for you guys, is how do I start a business? LLCs versus S Corps. What is the best structure for me with my personal business? I mean, nowadays with the beer bug pandemic, digital businesses have exploded, right? People have been having some kind of service-based online business that it solves a problem, and there's been a lot more online entrepreneurs and the growth in the past year. So what would you say for someone that wants to start a business, whether maybe we can to hit the digital side, and then we can hit like someone that might want to open a restaurant and more on the physical side. How do they get started? Where do they begin?
Typically, so I'm going to use you as an example.
Sure.
So when we first started talking, you were structured as an LLC, not knowing the tax implications of that. So basically, when you talked to me, I asked you,
an LLC, guys, for you guys that don't know, we're going to make this very easy. Limited liability corporation.
Limited liability company.
Okay.
Yeah, and that's from state to state. So the state of Florida has their own state department where you basically create your corporation. You go online. A lot of people do it. It's sunbiz.org. You get on there and you can form your business. So a lot of people that's where they start. Like, I'm going to be a limited liability company. It's great. That's all fine. But then there's a couple of forms that you have to file in order to be treated as a corporation, and the tax implications on that are huge. So one of them, when I talked to you, I said the first thing, like the first benchmark, basically is I asked if your net is more than $50,000.
And net means year. What you guys actually take home, just so you guys know.
So basically, you got your income, you got your expenses, and then whatever you measure your net to be, your net income. If that's $50,000 or more, then you want to make sure that you are treated as a S corporation. There's a couple of forms that you got to fill out with the IRS. It's very simple to do. But I get this mistake all the time. A lot of clients coming in and they do their own corporation. They try to save money. They don't take it to an attorney. Maybe they save a couple $100, and then they come to me and they're like, okay, well, there's a couple of forms that you got to fill out. Most attorneys don't know that. They don't know that they have to fill out. There's like, oh, just take it to your tax guy and he'll figure it out for you. So 9 times out of 10, I'll have that situation that we'll file those forms, and then that transforms everything. Basically, you're an S corporation. and then you have your personal tax return, 1040, right? So in your case, we made you an S corporation.
Yep.
So
I was LLC at first, guys, as a fitness business in the beginning.
So we'll just use simple numbers right now. And this is not your specific case, but let's say your net was $100,000, right? And you file those forms, and you're not really treated as an S corporation or a corporation. So what happens is you file that on your regular 1040 income tax return. You pay. There's two types of taxes that people are not aware of. There's ordinary income tax, and then there's actually three. Excuse me. There's ordinary income tax, there's capital gains tax, and then there's the self-employment tax. So that's the one that really comes into play for you. So if you got $100,000,
what's the third one? Ordinary capital gains, and
there's ordinary income tax, there's capital gains income tax, which are different rates, and then there's the self-employment tax.
Okay.
So you would have gotten hit. That $100,000 would have been reported on a Schedule C of your 1040. We file it together. So you got $100,000 profit. You're going to pay 15.3%. That's $15,300 in self-employment tax. Then you got to pay ordinary income tax. So whatever your tax bracket is, you're going to pay additional to that.
Which is what normal people that are W-2 that have a job with, that's what they're getting hit with, right? Okay.
Right. So by making you an S corporation, we put the $100,000 net income and report it on the S corporation. We take a portion of that, because we have to, because Uncle Sam's going to be like, hey, listen, you're not going to get away with not paying any self-employment tax. Self-employment tax is basically FICA, which is Social Security, Medicare, all of those, the W-2.
Okay, that they automatically take out of your paycheck when you get your paycheck.
Right.
Okay.
So basically, you take that, we take a portion of that. So sometimes, it depends on the type of work that you're doing. We'll say, oh, we're going to take maybe, I don't know, 25%, 30%, 50%. So we kind of see what's reasonable to take as far as to construe as a W-2 wage. Okay. On that corporation. So we got $100,000 net, right? We construe $50,000 maybe, as being W-2 wages subject to the self-employment tax. So now that goes and it gets cut in half. So you're only paying $7,500. So you're saving, just in that move alone, you're saving $7,500. Plus there's a lot of other stuff too that we can have with the S corporation. That's also going to a different department in the IRS where it's, it's different processing and examiners that look at it.
So let me summarize it for the people real quick. Because I think, and correct me if I'm wrong. So what he's basically saying, guys, is and that's right there is a game changer right there. Okay. He basically said, hey, instead of having an LLC, which most people do, I made that mistake too. So did Fresh. Right. We start our business off as an LLC. Everyone does this thinking, oh yeah, I got a business. So it's going to make me less liable. The reality is what you really want to do is you want to go with an S Corp, because if you go with an LLC, you get hit with three different taxes. Essentially, there's the ordinary capital gains, and then there's a self-employment tax. We're going with the S Corp. You basically absolve yourself of the ordinary. Was it the ordinary taxes?
Yeah. No, you're still going to pay the ordinary income tax.
Okay.
But I'm getting to that point. But go ahead. Yeah. Summarize it, because I deal with this every day. Often, I'm just like,
and I'm trying to break it down for
everybody's going to understand me. But
so you limit your tax liability by going over to an S Corp. In other words, Uncle Sam can't scrutinize your $100,000 that you work so hard for as hard if you're an S Corp versus being an LLC. So Uncle Sam is entitled to less of your money, guys, when you're an S Corp versus an LLC, and you might get taxed twice on the same income.
But here's why, because that schedule, like if you didn't do your S corporation like you did for your company, you would have reported all of that income and expenses, that business schedule, right? You would have reported on your personal income tax return. That's called a Schedule C. That schedule is the most audited schedule in the Internal Revenue Service.
Okay. Guys, you heard that?
So that wow. At 9 times out of 10 when you're going to have an audit, there's two things that happen. Typically, it's because a business screws up and they have employees and they forget to submit or they don't have the money to submit the payroll taxes. That's like the number one, because those are trust fund recovery taxes. So typically that's whenever somebody's getting audited, that'll be like the number one. And then the number two is they're putting their business activity on a Schedule C, not on an S Corp, and they have a substantial loss that they're offsetting against their other sources of income. That's the other one. So that's Schedule C. So that's by just doing the S corporation and forming a different, you're basically a little fish in a huge ocean when you go to the corporate filing, examiners, when they're looking, they're selecting returns to be examined, you're up against,
big corporations,
multi-billion-dollar corporations,
Yeah.
multi-million-dollar corporations, whatever.
You can make $1 million a year, and it's like, well, they don't
Right.
give a this is nothing.
Right. So that's, that's another thing too, is because you're reducing the risk of getting audited. So that's another great reason why you want to do the S Corp.
It's funny because we're told as entrepreneurs to get LLC. You go online and say, get LLC, you got business. But like real talk, you might lose a lot.
I mean, that's more from a liability standpoint, from an attorney standpoint, getting sued and protecting your assets. Yeah, absolutely. But from a tax standpoint, I mean, because that's where it stops with the attorneys. They're like, okay, yeah, you're a limited liability, which is great. But however, there's a couple of forms that you got to fill out, which we did in your case.
Yeah.
And then what it is now the IRS is they actually have a couple of revenue proclamation rev procs, we call them, where if you file it late, there's a certain amount of time where you get forgiveness for that.
With being an S Corp.
Yeah, if you don't do the election within a certain amount of time.
Yeah.
A lot of people come to me after the fact. They've already had that S corporation, for the better part of a year in excess. They never filed those forms, which was the case. And we just basically asked for forgiveness, and then they allowed you to do the S corporation. So that's another little trick too.
So with the S Corp, so that benefits that I'm getting more time to file, okay, less tax scrutiny because you're basically a small fish in a big pond. What was the other thing? You're hit with taxes less. They basically
it's what you're basically in that case. In your scenario, you're basically saving the self-employment tax, the FICA.
Okay.
So just on that alone, the 700 in that scenario that I was explaining is a $7,500 savings. Yeah. And basically imagine you're making 200,000, and you pay yourself a $50,000 wage. Now that's even more substantial savings.
Okay.
Because you're not paying the max self-employment tax on the wage.
So is there any real benefit then to going with an LLC versus an S Corp? Is there any real
protection?
Yeah, because in your case, you have a lot of substantial real estate, which is what we winded up doing an LLC for each property.
Yeah.
And I think you had a couple of attorneys on here that kind of gave you that advice too, to do all LLCs for all your properties.
Yeah, they had mentioned, like putting everyone under an LLC.
Yeah, so that's typically, and that's what I advise my clients to do, to all the little LLCs, because basically each one has its own the asset of that house, and you have tenants in there, and there's, I'm not going to give legal advice, but if they want to sue you, you're separating all your assets into limited liability.
So real estate, a real estate property would be a good example of a LLC that would work out for you, versus a business essentially is probably not.
I think the main thrust of why they came up with the LLC is because a lot of attorneys were practicing in multi-partner firms where you see 12 names.
Yeah.
And then, oh, I don't want Myron, his case and his client load or whatever. If somebody wants to sue him, I want that limited liability not to. If they sue him, I don't want it to come to me.
Okay.
So it's limiting the liability just to you and your assets, and it doesn't affect me as a partner in that firm.
Now, if I was, would they still be protected under an S Corp though in that firm?
Well, most
hypothetically.
Yeah, but I suppose there's some law firms as S Corps. I can't imagine that it would be, but mostly for just a regular business, it's just you, right? You're not dealing with other partners. So just for your main business, I would say just be an S Corp. But if you're getting into properties and stuff, which would be another reason why you would want to be a limited liability, then I would say, okay, yeah, just be an LLC. That's the best form for that rental property that you are going to be.
So the average person should be literally a S Corp until you get real estate.
If you're just going to open up a restaurant or something like that, with no real estate attached to it or anything like that, then I would say, yeah, just be an S Corp. It's a great form of,
Gotcha.
Yeah.
But if you're going to have a bunch of employees, a bunch of other people that work for you, whatever it is, and you're not, a solo entrepreneur.
Well, it's probably best to be an LLC, because really, if you're an LLC, you could still enjoy the benefits of an S Corp and be treated as an S Corp.
Okay.
So you get the best of both worlds, I guess.
Okay.
So I would say, yeah, just,
for a big business,
probably LLC.
Okay.
Yeah.
All right. All right. So, let's hit, I'll hit the super chats real quick. And hey guys, thank you so much. There's 1,200 of you guys in here. Guys, please do us a quick favor. Like the video, get us back up hot on the algorithm so that you guys can get more content like this. And also, we will probably answer some questions at the end. So, because I know you guys got a legit tax professional here. He does mine and Fresh's taxes. So this is definitely someone that you would want to speak with.
We're almost at 396K too subscribers.
Yeah, guys, get us to 396. Where are we at, Chris?
1 second. To shore.
Okay, there we go. We got Michael Meestroke 5. Likes are free like breathing. Thank you so much, guys. Yeah, please hit that like button. $2 vibe with Tay Reacts. What's good, gang? Glad y'all back. Much love. Thank you so much.
Thank you, bro.
Will Blackburn, saw you guys on Timcast a couple months back. Love the advice that you guys that you give to men when it comes to ownership of their lives. Absolutely, guys. And here's the thing. We're not gonna just tell you guys, hey, get better, make more money, get in the gym, blah blah blah, and not tell you how to do it. You know what I'm saying? Like we tell you guys the what, but we're also going to teach you the how now. And this is on the money side, where if you want to be an entrepreneur, etc. And then also, don't worry, guys, we're going to talk about running your business when you have a W-2 job as well. And we'll talk about how I was able to, because as you guys know, I had a W-2 job and then I had the business at the same time, how we ran it, and then how we switched over.
Yeah, this free show can save you a lot of money.
Yeah, guys.
A lot of money.
So please pay attention. Timestamps will be on the show after as well. King Life, I have friends who have a couple LLCs and tried to separate the incomes between the businesses. Is it favorable to spread income out? Chris,
I was talking with Trey a little bit earlier about income shifting. It doesn't work in that case because an LLC basically it's a flow through. It's a conduit entity.
Mm-hmm.
Conduit meaning the tax attributes flow through. So depending on who the partners are of those LLCs, if they're different partners, then you could actually basically income shift and spread the income over different taxpayers. But if it's the same owners of the same LLCs, then it's all flowing through and they're going to pick it up on their personal anyway. So it doesn't really matter. That's not a great strategy. Only if there's different partners that own, let's say, it's you two own one LLC and you and I own another LLC, and you could shift it effectively that way, I guess. But yeah, no, that's not really an effective income shifting strategy, in my opinion.
Okay. So, all right. And guys, get your questions in now. We'll answer all of them at the end. And we'll go here. And with the general overview, and then I know a lot of questions are going to come in. We might answer your question, but yeah, just stay tuned. And also, guys, get the notebooks out because this is very important stuff. So, okay, so just a quick recap because I saw the viewers exploded since I last looked back at the screen. So we're talking about S Corps, guys, versus LLCs. So for someone that I guess is so the optimal situation for someone that has an S Corp is I have my business. I pretty much run it myself, essentially, right? I'm like the president. I have 100% ownership. For that person, an S Corp is probably the best move versus what everyone does, which is an LLC, because of the benefits of not necessarily being hit with multiple prongs of tax liability, right? We talked about capital gains, self-employment tax, and ordinary tax. And ordinary tax is, what normal people get hit when on their W-2 job.
Regular tax rate, yeah.
And then
that's a regular income tax.
Self-employment tax is the tax that you get hit with, like your Medicaid, whatever it may be, Social Security,
FICA,
if you have a regular job. And then capital gains. Can you tell the people what capital gains tax is? Capital
gains are basically when you sell an asset or and you have a gain on it for profit. Basically, yeah, let's say you buy a house, for $100,000, and you go and sell it for $200,000. You got $100,000 capital gain. Or if you sell crypto, we're talking about
crypto, yeah.
You can get some substantial capital gains, I guess, if you cash out on something.
What's the capital gains tax on crypto right now? Because I think this year was the first year they put it on the tax return.
Well,
right?
that's what's going on right now. It's like the new administration, they want to get rid of the capital gains tax rates, which are more favorable. So you got the 20%, you got the 15%, and then if it's less than a year, if you buy an asset and then you sell it before 12 months are through, that's a short-term gain. So that is automatically taxed as the ordinary rates, which are higher. But if you keep it for over a year, then there's the long-term rates. And depending on what your income is, it's called your adjusted gross income, then you will pay either at a 15% tax rate or a 20% tax rate, which is better than, you're going to pay on the ordinary tax rate in most cases.
So the rule of thumb is if you buy an asset, hold it for at least a year.
Yeah.
Before you sell it, general, whether it's a home, cryptocurrency, whatever it is, to not get destroyed on the capital gains tax.
Correct.
Okay, so that's a good.
But that's what the administration wants, to get rid of the capital gains tax rate structure because they want everything to be taxed at ordinary income tax rate. You're gonna have people holding on to assets and not selling them. So you'll have guys that have a property and they've been hanging on to it for maybe 10 years and they have a substantial gain on it because of the value and they've already depreciated most of it. hanging on to that property because they don't want to have that, that capital gains tax rates. But I do have a great strategy, which we're gonna have to save it for your Patreon members, which is a dynamite one. And I matter of fact, I think my brother might be watching right now too. But he sold two huge buildings in New York, and he used this particular strategy, and he walked away with 95% of his money.
Wow, behind the scenes, man.
Oh
Yeah.
man,
That's fire.
Yeah.
And he's deferring that capital gains tax rate for 30 years.
Wow.
30 years. So
He might be dead by then.
and then he pays, he'll have to pay it at today's, you got the present value, the present value of money. So based, whatever a dollar is today is not in 30 years is not going to be a dollar, but he'll pay it in today's dollars.
Yeah.
In 30 years. So what he can do with all of that money, instead of giving 20% of it to Uncle Sam to do whatever, he's putting it to use for himself, and he could multiply that, and then the tax bill is basically whatever it is today in 30 years.
And guys, you got to understand that like strategies like this is why the wealthy stay wealthy, man. They got guys in their corner like Steve who basically, it's all legal. It's just being creative. There's a reason why Trump doesn't want to show, our former president, he didn't want to show his tax returns because, he probably did a bunch of things that were creative but legal, and that only the wealthy know, or the best, the best accountants that work with wealthy people. And this is how the rich stay rich.
And I saw in the chat somebody was mentioning the 1031 exchange. Yeah, you're right. You're absolutely right. The 1031 exchange is basically you can defer it indefinitely. Can
you tell the people what a 1031 exchange is, just real quick?
1031 is just a section code in the IRS. You just call it 1031. If you go to the code, everything's coded. You go to 1031, you're going to find out the rules about when you sell a property, and then you take whatever the potential gain is, and then you buy another property of like or of equal or greater value. It could be a multiple of properties. It could be you could buy one property and then buy two of equal or greater value. Then you can roll the gain over, and then but that only applies to real estate. Now the tax strategy I'm talking about is great for real estate as well, but it's also, I had a couple of clients, they bought a restaurant and they paid $250,000 for this restaurant. They didn't own the real estate on it. It was just a build out. I guess a rich guy, he bought this place, he built it out to the max, and he wanted his wife to be busy doing some stuff.
Okay.
And this guy was like, it was a guy like, when you start to type in your phone and it kind of knows what you're going to type and it kind of guesses the word.
Yeah.
This was the freaking guy that came up with the software for that.
Oh,
so,
wow.
Yeah.
He came up with the autocorrect software that iPhones and everyone else uses.
And he's getting royalties from that guy. Yeah,
Holy
moved down to Florida, bought this castle on the water. And then, he thought, all right, I'm going to keep my wife busy.
Yeah.
Right. And so he bought this building, and then he built it out beautiful.
Just threw $250,000 into okay.
Yeah. He's like Americana Cafe.
She's not going to be too much. I don't care.
Well,
here's this restaurant.
It was really nice. And then she ran it for like 6 months. And then she figured out owning a restaurant is like the fucking hardest thing to do. Like, they're the hardest workers.
Yeah.
And then
we could talk about restaurants here in a second too for you guys. We're going to talk about digital versus a physical business. Go ahead. Sorry.
So anyway, so yeah, that got old real quick. And then they winded up selling it. So basically it was a giveaway. So these two Italian guys came in there and they opened up a pizzeria, and from Napoli, and they were doing wood. It was phenomenal. So it was a hit. These guys sold the restaurant for like $3 million 5 years later.
Wow.
Okay. Oh, wow.
So you talk about.
So they bought it for how much?
$250,000.
$250,000 from the couple.
Yeah.
And then they worked, and then it became worth $3 million.
Yeah. So this company that owned a chain of restaurants came in and they bought them out. And then they came to me, and when I told them what they're going to pay in capital gains tax rate, they
to get that
literally got in they're like brothers. They literally got in a fist fight because one guy wanted to sell it, the other guy didn't.
Oh.
So they were in my I had to kick them out because they were just fighting. I'm like, so they were like, I'm not selling this, and like guys, well, we got to. So they finally, I put them into that strategy that I'm talking about.
The 1031 exchange.
No.
Not
No. Because the 1031 only applies to real estate. They didn't have any real estate.
Oh, because it's just a business entity.
They were renting it.
Yeah.
They were renting it. And so they sold it and walked away with 95%. They took that money, bought a piece of property in a high traffic area nearby, and built their own building, like a 2-story restaurant. with all that money and had some left over, and then now that thing's been going crazy too now.
So for just so the people, and that's not a 1031 exchange, guys. That's another strategy that he implemented that because that was not real estate, but with real estate 1031 exchange. Let's say I buy just to dumb it down for you guys because not everybody is sharp as Steve. And me too. Like I have to say it to myself sometimes to really understand. Let's say I buy a house for $100,000, right? I hold it for a year, and then it's worth $200,000, and then I sell it. And I make $100,000 profit, and I get I get it for $200,000, right? If I just take that money out, I'm gonna get hit with a capital gains tax. But if I take that money and roll it into another property,
you don't pay anything.
I don't pay anything,
Right.
and that's what a 1031 exchange is, guys. It's basically a way for real estate investors to have a property, sell the property, take the wealth accumulated from selling of said property, and roll it into another property without Uncle Sam getting his hands on your money and taking anything away, so that you can take that money and get something bigger and better or whatever it is. So, because that's what a lot of guys do. They'll sell the property, and then as soon as they sell it, they use it to do a bigger deal, typically.
But for the most part, you don't really lose because it's more cash flow anyway.
Yeah.
So
Correct. But now, with the market the way it is right now, it's it's competitive. It's kind of tough to find that like kind of exchange. And sometimes you don't want to lock yourself in a property that you really don't want. It could be a dog, but you're trying to save money in taxes, and you're picking up a property maybe that you don't want in an area that you don't want, or something maybe something specific about it. So yeah, the 1031 in an ideal world, it works great, and I would recommend that first and foremost.
Mhm.
But when you can't use that strategy,
Because it's
then-
explicitly for
yeah.
real estate only.
yeah,
Okay. So as we a lot of guys in the chat, have asked me about, I have a W-2 job, but I have a side hustle.
Yep.
So how should someone that maybe has a regular job, right, getting taxed and everything else like that, but they're doing their business, and at some point they want to segue away from working for somebody and become an entrepreneur, how should they structure their business in the beginning, and then slowly, as they make more money with their side hustle, segue into the entrepreneur world and put themselves in the best tax situation while making that segue? How do you say
mean
this?
typically I would probably have them start the way you started,
Okay.
not necessarily jump into the S corporation, and basically if you have a side hustle and then you start to net more than $50,000 a year,
Okay.
within that first year or not.
Key term right there, guys.
yeah.
Over 50K net.
Yeah, that's
which means you hold on to. You made
Yeah.
it. It's yours.
That's when it makes it sense to pay the filing fee, to have an extra return to and pay the filing fee for that, not only with the state, but also the tax return prep, and keep, to do the S Corp is that $50,000 limit, in my opinion. I think
Okay.
that's kind of like the benchmark there. But yeah, that's what I would say. Just definitely, it's so cheap right now. If you're in Florida or wherever you're at, most jurisdictions, you can just go online and like their Department of State, it's pretty much a walkthrough. You can just do a corporation right online yourself.
Yeah.
If you're going to be doing something a little bit more heavier, and you're going to maybe buy a restaurant or something like that or whatever, then I would definitely get an attorney involved.
Okay.
And, have
But for a service-based
professional do
business,
it.
so with a service-based business, whether it's like online, right? Like a lot of people are becoming
Yeah.
digital entrepreneurs. So you would say, start with an LLC.
Right.
Once you break 50,000 net, guys, which means you're going to have to make significantly more than that. You're going to have to make like 70, maybe 80 grand to net 50, right? Then they can go ahead and switch over to an S Corp.
Yeah, but you got to make that determination in the first year or second year because of the forgiveness. So because you got a limited time frame to do that.
Okay.
Once that window passes, then you can't go back. You'd have
6
to
months
form-
into the year or more, you
Yeah.
can't do it anymore.
Yeah, then I would say, a lot of times I'll tell guys like, hey, you've been doing this for 2 years. Now you're making 100 grand. You were making nothing,
Mhm.
but now it's too late. Maybe it's like the third or fourth year. Now it's too late for you to go back and do the S election. So what I do is I'm like, all right, we're just going to close this LLC down and let's do a brand new one. And let's like make you an S corporation right from the get go.
Okay, that's a game changer.
And
I did not know
yeah,
that.
yeah.
So, so they can't switch to an S Corp.
After a certain amount of time, like typically the third year, you're like, okay, the window has like, you could
Okay.
kind of get away with it, and for, I got to remember, there's a certain amount of time. It's probably within the second year, you have to do it.
If you want to go into an S Corp.
Yeah, there's like that late filing relief.
And if you don't make the time, you can go ahead, get with your accountant. He'll restructure you,
correct,
make a new business
Correct.
entity that's an S Corp so that you can get the tax benefit.
Correct.
So summary, guys, start as an LLC. Hopefully, if you net more than 50,000 within 2 years, which is possible, especially with digital business, right? Because remember, you have less overhead. You're not running a physical business. You should be able to profit most of your money because you're doing it on the internet. Then you can go ahead and switch over to the S Corp once you hit that over 50K threshold. And if you don't,
there is a little nuance I wanted to mention
go ahead,
with
please.
the limited liability company. If you take on a partner So let's say you two have a limited liability and you take on a partner,
Uh-huh.
then you are automatically treated as a partnership.
Okay.
Yeah, and the tax consequences of that too are different. So that's kind of sometimes that's another reason where I would say, listen, if you're going to have a partner, then I would say let's do an S corporation, unless a partnership might make sense in that case, unless you want to like not split the profit according to your share, your ownership share. Like maybe you're 40 and he's 60. So in an S corp, then you have to do what's called pro rata.
Okay.
So you split all the expenses and all the income and everything based on how much you own percentage wise. In a partnership, it doesn't necessarily have to work that way. In a partnership, you can
create your own distribution percentages.
Yeah, you can like, oh, I'm gonna be 90%, he's gonna be 10, or you know,
and vice versa.
Yeah, and then have different ownership percentages too, and capital accounts and all that. So that's a little bit of a nuance with the LLC too. So there's kind of like there's more levels to it.
Okay.
So if I'm a YouTuber or a Twitch streamer, the best thing, generally speaking, will be LLC. But
if you're just a solo guy, if you're an LLC and a solo guy, then
in the beginning,
and you're not making more than $50,000, then you're just going to report on that Schedule C. That's the highly audited one. You know, and again, you got to be careful because I don't like to see those forms like that with a substantial loss. Like now they got their W-2 and they're making 100,000, and then they got like a Schedule C and they're like, oh yeah, I got a $30,000 loss that's netting against that W-2 wage. That's a red flag. The IRS was like, whoa, wait a minute, what, how are you like writing all the expense up and you're bringing it to a loss? Like I've seen clients get audited because of that. I had a real estate agent actually when the market tanked. She was legit. She was still paying her desk fee, doing all her advertising, going around. Nobody was buying houses in 2008, 2009.
Yeah, of course. Yeah.
Right. She spent a lot of money. Her husband was like making $300,000. Okay. She had a legitimate loss. She paid her rent. She paid everything. She had all the expenses, all the receipts. She got audited. And they fought her on everything. They're like, oh, well, no, you can't take this loss. And there has to be production of income and blah, 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 and this and that. And she had all the receipts, everything. And then I said, well, just take it up to the taxpayer advocate. And she would have won. But then at that point, she was just so exhausted and tired. She's like, oh, I'm just going to pay it. I didn't do her taxes in it. She came to me.
She came to you after the fact.
After the fact. Yeah. Because if I saw that, I would have been, all right, let's figure something out. But I learned a lesson from that. So that's something like when you were talking about is you got to be.
And she had a Schedule C.
Yeah.
And she had it under LLC.
I would have told her, and all my real estate agents, I tell them, like, you're just be an S Corp.
Okay.
That wouldn't have been an issue because she could have took all the expenses on.
Can you explain one more time to the people, like, why it's so bad to have a Schedule C? Like what a Schedule C is exactly, and then why it's so bad for people to have that LLC, have that income reported on a Schedule C and their tax returns as well, their normal.
It was funny because when we went into the IRS office there locally, it was like literally, like it was like a character in a movie. This guy had, I swear to God, the glass, like he had a magnifying glass. Yeah. With like it was weird. You go in there and he was looking at all the receipts and I want to see the lease, this and that. And so the reason why is here, and this taught me a lesson too. It's like you're getting this person at the IRS that has no skill level to assess and determine and audit a business, a legitimate business that this lady. So now his jurisdiction is on the 1040. He's an examiner. There's two different departments of the IRS.
Okay.
One that examines, they call them the auditors, examines personal tax returns, and those that examine business.
Okay.
Right?
Okay.
So because she was reporting all that stuff on her personal tax return, now he's got jurisdiction over that.
That's okay. That was very important that the distinction was made. So
yeah.
Okay.
So now I would have told her, I'm going to use a fake name, Lisa, you should be an S Corp. We take the loss of $30,000 on there. You get what's called a K1 because it's a flow through. Then we attach that via K1. Same guy would have looked at it. He doesn't have jurisdiction to look at the S Corp return. And so it would have been like,
and she, again,
she wouldn't even have red flag. Wouldn't have been.
She's a small fish in a big pond, right. And she did and the thing that sucks is she did everything right, but because she filed it incorrectly,
She didn't file incorrect. She filed it absolutely correctly, but
Okay.
because of the way she was structured, it raised a red flag because
she wasn't structured properly.
Her husband making a ton of money.
Yeah.
Then she got this big loss on that. Now he's got the jurisdiction over that, and then he could look at all her receipts and ask, just basically audit her.
This is why it's important before you even start business. Go to somebody like Steve so you can go prepared for what's coming. It's important.
Yeah. So I mean, I learned a lesson from that. So. Yeah, all my ever since that day, all my real estate agents, I'm like, you're going to be an S Corp.
Okay.
Because there could be a time when you're hustling out there and you're driving your car and you're using your phone and you're paying all these expenses as a real estate agent and you don't sell a damn house. Maybe a couple of closings fall through. You don't know.
Yeah,
you got all these expenses. They're legitimate expenses. So I just for the very fact of that alone, I just be an S Corp.
Okay, so she reported on her personal tax returns, and that's what messed her up. Yep. And you want to separate the two when you run a business. If you make over 50,000,
right?
Okay, that right
that's
there,
usually
guys.
The threshold right there where I say it makes the most sense because the cost benefit.
Okay,
is going to be
a lot of game right there, guys. Man, holy shit! All right, let's hit these super chats real quick. Guys, thank you so much for all the donations. We appreciate it. Like I said, this is stuff, guys, that's going to save you thousands upon thousands of dollars in the long run. We got the Neologic $10. How do you get the benefits of an S Corp with an LLC, and what are the limitations of those benefits? Chris, please keep that safe. Yo, Steve, sitting for AUD next month. Wish me luck on my license. Okay. That's John Watts. Shout out to John Watts. He's an accountant as well.
Yep.
Polo Immobilian. Sorry. Hi. Any tax advice for U.S. expats? U.S. citizens are required to file and sometimes pay taxes on their worldwide income, which makes wealth creation for expats pretty hard. Good question. We'll answer that at the end. Raul, $20. I'm from Latam. Is it good to open an LLC remotely to access U.S. stocks and crypto trading markets at USA? How moving money between my country and my LLC would look like? Sale and tax ideas. Thank you, guys. Good question. I started S Corporation to do Uber last October. Was that the correct move? Excellent question. We'll answer that as well. Question for Steve, $10. Augie, could I write off courses like Charlie's crypto course or DMs on demand on my taxes under education? Excellent question. Chris, please save those, and then we will answer those at the end, guys. Don't worry, we got y'all. Awesome. And just keep rolling them in, and we're going to answer them at the end. So now so a quick little summary, guys, because we discussed a lot here. And I want to make sure correct me if I'm wrong here, just a quick summary. So start off as an LLC. For someone that wants to segue from working a W-2 job over to becoming an entrepreneur, start your LLC. Bang. Once you make over 50,000 net profit, guys, you've made more than 50,000 take home, right? After all expenses, whatever it is, you probably want to go into an S Corp if it's been within 2 years or so. And then once you go over to the S Corp, it's going to protect you from certain tax liabilities that you wouldn't be protected from with a mere LLC. And we talked a little bit about the partner stuff, but I won't get too into the weeds of that. But I guess the main take home here, LLC in the beginning, once you net more than 50K, switch over to the S Corp as soon as you fucking can so you get the benefits. And then we discussed the issues with if you don't do that, then that income will be reported on your personal tax return under an LLC. And then we'll have the situation like the woman that your friend, who they ended up dinging her for, even though she did everything correctly because her business wasn't structured properly. In other words, she made too much money for the way that she was structured.
Her husband did.
Okay.
Her husband did, and she had a legitimate loss, all verified, all backed up with receipts, and they just pushed back.
And they probably filed jointly, right? That's maybe.
Oh, yeah, absolutely. Yeah. Okay. Husband and wife. Yeah.
Yeah.
Did,
okay.
Yeah.
So that's something for you guys.
I don't know if that
there
would have mattered at all, but
Oh, they would have probably dinged her anyway, regardless.
Yeah.
Okay.
Yeah.
So yeah, guys. So structure is going to save you, man. So key, get over that 50K and switch over to an S Corp as soon as you can. And then Steve. So we talked about the digital entrepreneur side. What about someone that might want to open up a restaurant or some kind of business, maybe a mechanic shop or something like that? Obviously, you might need a little bit more capital to get into it. How should they proceed versus being a digital entrepreneur with opening a business, a hair salon, nail salon, whatever it is?
I mean, it's just I use the same
thing. Okay.
Basic threshold. I mean, like, are you gonna make? Typically they're probably gonna make more than 50,000 if they're gonna hang their own shingle and do something like that. Yeah, definitely S Corp right away.
S Corp from the
S Corp
rip.
right
Okay.
away, right from the get go. Yeah.
Okay.
Unless they got partners in that particular business, and one brings certain things to it, and they want to split the, they want to have like certain agreements, and they like, oh, you're going to get 10% and you're going to get 90, and I have that where I have some where like if there's a loss, it goes 100% to one partner and not the other, and if there's a profit, it's 50-50. That's in the partnership,
Mhm.
which is it's a whole different animal. So there's a lot of things you can do there,
Okay.
tax wise. But yeah, but typically,
So if you're going to get into a partnership where you're distributing money among multiple individuals, LLC is the way to go.
yeah, there's
versus
like
an
all
S Corp.
different types of agreements and who's
Okay.
going to put in how much money. I'm going to they call it capital contribution. So your capital account, you might bring some excellent talent. Maybe you're the sales guy. I'm going to bring all the business in, but you have no money. Maybe Fresh has the money, so he's going to donate his watch.
You're funny.
So we got to talk about writing that off.
There you go.
Yeah.
So so in that case, so now maybe you're 50-50 because you bring he brings money and you bring your talent.
Okay.
And then so there's different things you can do, and then if there's a profit, maybe he doesn't want you to get so those are the nuances of why those particular LLC partnerships.
Okay.
Yeah.
Okay. But if you're going to get into business by yourself, where you're the primary owner, S Corp.
Yeah,
especially
S
make over
Corp,
50K.
everything's got to be pro rata. So if it's you, typically it's one owner.
Okay.
It's 100% owner. That's it.
And that's what we did with my business, guys, just so you guys know. So we can use me as an example. I had my business as a fitness business incorporated as an LLC. And then we broke that 50K structure or 50K limit, right? And then Steve was like, hey, we got to switch over to an S Corp. And at the time I had my government job, guys, right? So I had my W-2 income for the year 2020. And then I was contributing to, retirement and all that stuff there. And then we switched over to S Corp that I think in 2020 as well. We switched. I started in 2019. The business got incorporated in 2019, guys, June 2019. Then 2020, we switched over to the S Corp.
Right.
And then switching from that, I was able to and I still had my government job. So what we did was we were able to separate the business income from my personal tax return income. Because let's say I reported both. Let's say I report 6 figures with the government and 6 figures with my business, they would have destroyed me and taxed me for far more.
Yeah, I think you say we said like 15,000 or something like that.
Yeah, I ended up paying about 18,000 in taxes.
Oh Lord,
that one, which I would have been liable for far more if I had done it.
Like about 15 grand.
Yeah,
I think minimum it was
yeah. So I would have owed a lot more money if I didn't switch over to S Corp, guys. So the business. Okay, this is what I was going to ask. So the people know there. What is a tax write-off? Can you break it down to people what it is, the percentage that actually gets taken off, etc. for dummies?
Okay, so I mean, a tax write-off is just basically an expense that is reasonable and necessary. Ordinary, reasonable, and necessary. That's what the IRS says. Is it ordinary?
Okay.
Is it reasonable? And is it necessary to the business, the function of the business?
Okay.
You can write it off. So that could be any number of things. It
Okay.
could be rent, car. It could be your phone, your computer, your advertising.
Let's say I buy something for $1,000 for the business, right? Let's say I spend $1,000 on microphones and some equipment, whatever, and I write that off. What percentage gets taken off for what I'm liable for?
So
if I spend $1,000 on business,
if it's 100% legitimate and it's ordinary, necessary, and reasonable, you take 100% of that expense right out. You write it right off. Yeah.
Okay. So if I make $100,000 for the year, right, guys? So we'll give you an example. I make $100,000 for the year. Then I buy equipment worth $1,000. Now the IRS can only look at $99,000 of income.
Correct. Yeah.
Because
that's
what I owe them money on. That 99,000.
Yeah. And then you're talking about like I think we were talking about the G-Wagon, right?
Yes. Yeah. We can walk through it. Yeah. Go ahead.
So we talk about the G-Wagon
and the Range Rover too.
Yeah,
how we were able to, how we did that whole situation.
Yeah. So that, because that vehicle is over 6,000 pounds, you can write the whole thing off. It's called Section 179, but you can write the whole thing. And I have a lot of clients that they buy their vehicles for business. Right at the end of the year, they figure out if we'll recap like the nine months prior, and we get down to the third quarter, and I'm like, hey, John, you're making a lot of money, and you need some write-offs. And then at that point in time, he'll go out and they'll like, I need a couple new trucks or whatever, and we'll plan that, and you can get a couple $100,000 write-up because you write the whole thing off. So like in your case, we talk about the G-Wagon. That's over 6,000 pounds. You can write the whole thing off in that year.
Wow. Well, what about, because we got a Range Rover earlier this year, and we were joking about this.
Yeah.
With
so you guys,
G-Wagon, but so we can write off the entire Range Rover, right?
Yeah, because it's a business car. You guys are picking up, you're driving around picking up people at the airport, and so you're gonna get a write off for the business usage of that.
I used to wonder why, like Grant Cardone would buy like a Rolls Royce Colonel, these YouTubers will buy like huge, expensive, heavy cars, but no, it makes sense because they can write off the whole price of the car. It's like, wait, why are they buying these?
Yeah,
big ass-
there's luxury limits on those
Yeah.
vehicles. I mean, you get depreciation on it, but it's limited.
Mm.
Now, in the case of the G wagon, it's not. It's not because it's over 6,000 pounds. But like if you're talking about the Lambo truck,
Yeah, like a
Yeah.
Urus.
the Lambo, I think we looked it up. It was like 48.
Yeah, it's under
4850. It's
under.
under that 6,000. That's what first thing I looked at. What's the weight of
Oh,
that?
the Rolls Royce Colonel is
So that
way
one is
more.
subject to the yeah, it's up, so now you got to determine like, what's the business you should do? Is it 50%? And then you're going to take 50% of that cost basis on that car, and then you have to you're subject yourself to the limits. And there's a schedule. I'm not going to get into the weeds on that one, but it's not as beneficial as like a G wagon.
Mm.
Obviously it's more of a status symbol. It's high price and it's a beautiful car. And but yeah, from a tax perspective, yeah, it's not as great a write-off.
Okay, so 6,000 pounds is the key.
That's the key.
That's the key to.
Yeah.
Can you tell that we mentioned a term during the show, depreciation?
Mhm.
Can you tell the people what depreciation is and how it works, and when it comes to taxes and business and everything else?
Yeah. So in a nutshell, basically depreciation is like what's the useful life of like this mic,
Okay.
for instance. This mic
Use
would
this,
be, I would say, because it's computer equipment and the technology is moving fast, I would give that a 5-year life, right?
Okay.
5 years is going to be obsolete fully. It's not going to be worth anything,
Uh-huh.
So the IRS says, okay, that's reasonable, 5 years, and then we depreciate that over 5 years. But a lot of stuff right now, if you're a small business, we got a huge where you can just write it all off in the first year.
Mm.
So irrespective, but sometimes you don't want to do that. Sometimes we slow the depreciation down because we don't need it all.
Okay.
Sometimes I'm like, yeah, you don't need it all. So sometimes I won't depreciate like expense it all.
Okay.
So I'll say, all right, save it for next year because you're going to make more money next year. You got a couple of deals coming up, so we'll save some depreciation for next year. We'll offset your income.
So let's give the people an example. Let's say this microphone, right, is $1,000,
Mhm.
right? And easy numbers, guys. I'm really bad at math, right? It's more than that. But let's say it's $1,000, right? And we know that it's going to lose $100 value every year. So would we write, hey, the mic is now worth $900 after year one, or how would that work exactly?
So over 5 years, so we take 20% of it, so it'd be $200
Every year.
Yeah, every year.
Okay.
And basically that's kind of like how it works. It very simplistic.
Okay.
But let's say, for instance, you bought like $100,000 of equipment.
Yep.
And you made a $75,000 profit. So I would say, all right, let's pick out some of these assets and not take it's called accelerated depreciation. We're not going to take the accelerated depreciation on it. We're going to hold it back and not take bonus depreciation, because there's also bonus depreciation on it, which I'm getting a little bit,
Advance.
a little offense. But anyway, so there's methods that we could hold back some of the depreciation on some of the equipment that you bought to use in the next year. Because maybe next year you're going to make 200,000, and we could use that extra 25 grand.
Okay.
To get you down to 175 to start with, and whatever other.
So depreciation, essentially, for a quick summary for it, it's a tool that's used to limit your tax liability for the IRS based on things that you purchase.
Yeah. The IRS basically says everything has a useful life to it. So,
okay.
And it's called matching. This is like, I'm getting a high level accounting. So you're matching your income to your expenses. And that's just it's a matching basically. Okay. Yeah. So you take, if it's going to last 5 years, then you're going to take 1/5 of that, which should really be technically the expense that you match against every year's income in there.
And now you guys know why Steve's our accountant.
There you go.
Oh man, and guys, this is all like crazy sauce right now for you guys. So okay, I'll read some of these super chats real quick, and then we can get Fresh. Do you have anything before we answer the people's questions?
You pretty much answered it regarding YouTubers and Twitch streamers. What about Forex traders? Is it the same thing for them?
That's a little bit different. So I mean, you could, if you're going to be doing that professionally, and then I would say, okay, definitely that's a way for them to basically get some business write-offs, like set it up as a business, and they do trading in there, and then you get some business write-offs, for like your maybe your phone, your computer, and your internet connection and all that stuff. But as far as the cap gains within those when they're trading in there, there's not too much you can do to offset, some of that stuff.
Because I got friends that are buying like G-Wagons, Lambos, Ferraris. I'm like, yo.
Yeah, the G-Wagon is a great one. That's a great one. Yeah. That's one that, I've had a lot of my clients buy that particular vehicle, and we just expense the whole thing.
I just don't like how it looks, but
Huh?
give me
Yeah, you don't like it, really?
Give me a Urus.
Have you driven in one of those?
Yeah, I driven in one.
You get the seats and they push you around when you go around the corner.
I just hate hearing that click noise all the time. Click whenever you shut the doors.
I know, yeah.
Is it gonna break?
Yeah.
Question, Steve, what if you have two LLCs and you want to merge them into an S Corp? How would you go about that? Can you do it?
Two LLCs and merge. I mean, then they would. The only way to merge them is like, okay, you start an S Corp, and then the two LLCs become shareholders of that S Corp.
Okay.
Instead of like, yeah. So they would, So that's. I mean, I've seen that where.
Could you dissolve those two LLCs and just start one S Corp that
I
does
would
both?
probably do that. Yeah.
Okay.
I mean, it's more simplistic because
Dissolve
that's a
those two.
complicated thing. Depending on like, there's got to be a good reason to keep that structure.
Yeah.
Sometimes there
strange.
is, but
Yeah.
in most cases there's not.
It's not.
It's just an added layer of headache.
Okay.
Yeah.
All right. I'll read the super chats real quick, guys. Let's see here, and then we'll get into answering some of the questions. Ostrike, $5. Why $50K dollar threshold? Is it a lot of time and trouble, or is there a high fee for S Corp? I think we answered that earlier. It's because there's a high fee for S Corp, which is to justify.
Not necessarily.
No?
I don't know. It depends on the state you are. So most states it's a nominal fee. Depending on where you're at. I know here in Florida it's not that expensive to keep your corporation open. It's like $150 or something like that. But then you got the filing fee on it.
Okay.
So typically if you're going to pay so it's got like a cost benefit analysis to it.
Okay.
So I just kind of use that as a threshold. Okay. If you're,
that's your general rule of thumb for guys, so that it's worth the switch
for what you can save on the self-employment tax, and okay, you're going to save like $2,500, but then your filing fees and you're to pay somebody to do it for whatever, and maybe charge $50. So maybe there's a little bit of savings in there.
Okay.
But I typically say that if it's $40,000, then it's gonna be nominal. It's not gonna be worth it.
Yeah, might not be worth it with paying someone to do the structure for you and everything. Okay.
Yeah.
We got Rod Eric, $5. What do y'all think of purchasing a shelf corporations or age corporation? Good question. We're gonna answer questions here in a second. And then we got D Nice. Steve, if you get CPS notice but don't have receipts, what's your advice? Okay, don't worry, we got that as well. Pac-Man T91. Hey guys, fire show. As a W-2 employee driving semi-trucks, at what income threshold should I hire a CPA? Also, my suggestion for truck driver and taxes. All right, perfect. Good question. And then we got Raymond Random, $5 from Great Britain. I saved 10,000 quid working through the pandemic, then blew it in a few hours on coke and tricking. If I only discovered you lads earlier, SMH.
Bro, I hope you're joking.
Stupid. Oh man. And then we got DLC with a big $100 super chat. Welcome home, fam. Watching No Jumper. Great episode. Keep leading from the front. I'm proud of you all. Proud of all of y'all. Thank you so much, DL Saint. We love you, bro. Thank you so much for the support. So, guys, quick little announcement here. So, if you guys don't know, we have ffsparebomb.com live. Chris, we can pull up the website, please. Where you guys are. It's a sweepstakes for you guys to win a Rolex, PS5, AirPod Pros, merch, shout outs, a bunch of different stuff
live
that we got
show
going
here
on.
in Miami.
Yeah, a free trip to Miami, etc. And it's very simple, guys. All you got to do is go on this website. Here you go, Fresh, if you can open it up. Go on ffsparebomb.com. It's a giveaway. We're going to be running it for 90 days, so we have 80 days left. Can we scroll down a little bit, Chris? And all you guys got to do is two things. Very, very simple. You're going to go ahead and put your information right here, right? Your name, email, phone number, right? So that we could track your points, right? And you're going to subscribe to Fresh Fit Clips, step 1. Then step 2, go ahead and put your information right here to get your referral link. You're going to get a special URL. You share that URL with your friends, have them subscribe to the channel, Fresh Fit Clips, and then bang, you get points. So 5 referrals, you get a shout out live on air / prior prizes, 10 referrals, personal thank you video text, 25 referrals, FaceTime call with Fresh Fit prior prizes. And remember, guys, each time you hit a new threshold, you get everything prior as far as a prize. 50 referrals, stay over there t-shirt, prior prizes, which I ordered a bunch of them. They're coming in. It's a new design that me and Chris made for you guys. It's actually hilarious. And on the back, it says ffsparebomb.com here before a million. 100 referrals, AirPod Pro sweepstakes. You're entered to win it automatically, plus all the prior prizes. And you get free entry to the 500K party for those that get us 100 referrals. Then 500 referrals, entered to win a PS5 sweepstakes plus prior prizes. 1,000 referrals, free trip to Miami and meet FreshandFit in studio and prior prizes. And then second place, regardless of how many people you refer, is going to be 1,000 cash prize and all the other prizes to include, getting enrolled in the sweepstakes, getting a trip to Miami, etc. And then the first place is you get a Rolex and everything else. And this Rolex right here, guys, $15,000 we spent, because We love y'all. Thank you guys so much for supporting us. We want to make sure that we reward you. To get the Rolex, though, you guys got to be enrolled in our boys Identity IQ, our sponsor.
For credit scores.
To monitor your credit score, which, guys, we talk about credit, starting a business, everything else like that. Credit is critical.
This whole studio was built on credit.
Yeah. And can you click the IDIQ link real fast, Chris? Because with IDIQ, guys, what they do is it's a credit monitoring service. If you get your account stolen, you get any. Matter of fact, guys, I got a bunch of. I got some weird charges while I was in LA. Real talk, $13,000.
Yep.
And I was notified by these guys and also for my credit card company. So this stuff can really help you out, man, and keep you from getting your identity stolen. Identity theft is one of the fastest growing crimes. I know this from my prior career. Right? People are going from drug dealing to scamming now. And with Identity IQ, you put your stuff in there. They track. They monitor it. If you do get your stuff stolen, they insure you up to $1 million. And yeah, man, credit in today's day and age is literally key, guys, to getting wealth, because you're going to leverage your credit to get assets so that you can make money.
In life, you need a roadmap, right? So picture this. If you want to get somewhere in life, especially your credit score to improve, you got to know what it is. So they give you real-time advice and also viewing of your credit score. Like, for example, before I went to buy a property that I had, someone stole my credit card information, my social, all that stuff. And if I wasn't verified or notified by these people, I would have been finesse, because I went to the borrower, whatever, the lender, and if I didn't know that going forward, I could have been a lower rate or not even approved. So it's very important,
guys. By having a good credit score, you literally save yourself thousands upon thousands of dollars, right? With getting better interest rates, better terms, better agreements. And I'm telling you guys this from what I used to do. You want to get in law enforcement, you want to become an agent, you want to be work for the government, you want to have a clearance, you want to have any type of public security job, you need to have good credit. They aren't going to hire you guys because guess what? They don't want you to be compromised, right? By foreign nations, foreign powers, whatever it may be, when you have issues with money. So that is why credit is so important, not just to your employment capabilities, but also to acquiring assets as well.
And shout out to some of y'all that already won the prizes already, man.
Yeah,
y'all are killing it in here.
And we're gonna announce. Every night we're gonna announce the guys every day. So we're gonna do it on the after hours show. Announce all the guys that hit that that 5 referral. And all the awards are going to be given out at the end of the 90 days when we tally up and see who won. So, guys, thank you so much for the support. It's ffspiritbomb.com. Check it out there and get enrolled so that you can win the Rolex and all the other prizes. And here's the thing, guys. You don't have to do Identity IQ to get the other prizes. You only need it if you want to get the Rolex. But for everything else, the cash prize, the trips, the sweepstakes, the shirts, all that other stuff, you don't got to enroll Identity IQ. We wanted to make sure that we gave you guys prizes regardless of your level of support. So thank you so much for that.
Steve was like, give me the Rolex, bro.
No, I got a story for you about identity theft. I had that happen to me back when somebody stole, this is back in the day, somebody stole my selective service card in the mail. And they winded up getting a job in Buffalo, New York, working at a temp agency. They were able to use that with some other fake ID to assume my identity. I didn't find out about this until 2 or 3 years later when I got a letter from the IRS that I filed my taxes and they were charging me more.
Wow.
That I didn't put all my W-2 wages in there. So I had to go down and it was a mess. So yeah, sign up for that.
Yeah,
that's a real thing.
That'll save you headaches down the road, man.
I mean, good thing it was I was so young at the time that I didn't have a lot of stuff to lose or whatever. So it was kind of a pain in the ass because it happened 2 years in a row. This guy worked for 2 years.
Oh,
it was funny because I walked into the office. I goes, yeah, you're definitely not. It was a black guy, Dominican, that was short little guy.
You get arrested?
Okay. Yeah, he's like, well, I know it's so he helped me fill out the paper. I had to give it all to the IRS. I had to go down to the credit union. This is back in the day when there was
before
Equifax and everything's I had to run around town. I spent a couple of days doing that.
Did he get arrested?
I don't even think they ever found him. No.
Wow.
Not that I know of. Not that I know of.
Yeah, man. Scamming and credit card fraud and stealing identities is the fastest growing crime, guys. They get way less time for it, and it is what it is, man. So protect their identity, guys, so you don't deal with these headaches, man. Hell, if that was around when Steve was younger, when he had hair back in his head, he would have found out that this loser in upstate was stealing his stuff, because your selective service card has all your stuff on there. For some of you guys here, some of you guys are foreign. Selective services in the United States, when you turn 18, you have to enroll yourself in to be drafted in the military. And if you don't, it could cause you a lot of problems. You can't get federal employment. You get jailed for it, fines, etc. So you have to enroll, but all your personal information is in it to include your social security number. So this guy stole your selective service card.
Yeah.
God, man. Okay. All right. So transitioning back, guys.
How dare you?
Oh, wrong. See, I'm rusty here. All Okay, let's hit up some of these questions that Chris had. D-Nice, $5 if you sell a car, Steve, does that count as capital gains on your taxes? Don't worry, we'll answer that.
And
here in a
check
second.
out Telegram. I put them all in there.
Okay, all right. So I'm gonna go in order that they came in, guys. Because some of you guys asked some fantastic questions, man.
Yeah, there's a
really good questions in here, which is okay. So we got okay. King Life, no, we answered this question. Thank you so much for King Life, by the way, for supporting the Neologic, $10. How do you get the benefits of an S Corp with an LLC, and what are the limitations of those benefits?
So an LLC is a limited liability company, so I suppose you get better legal protection of your assets.
Okay.
And then the tax benefits of an S Corp and the easiness of filing the S Corp return, I think, are more beneficial, as we had talked about in your case.
Yeah.
So
and we discussed this in quite a bit of detail. This chat came in earlier with the benefits and the negatives of both. It seems to me.
Yeah. So probably I maybe answered this question as we were talking.
Yeah.
So yeah. So
okay, but I guess just to give it nice and succinctly from our conversation, what it seems to me is, from a protection standpoint, an LLC is great, but from a tax structure standpoint, the S Corp is far better. If you meet those thresholds that we discussed before, being in business for less than 2 years, making over 50K net, whatever, it puts you in a better position where essentially the IRS puts your tax return in a big pond, in a big ocean with sharks, versus putting it in a small pond with a bunch of fishes, where you're going to be more liable. The likelihood of you getting audited goes up significantly.
You know, most cases taxpayers, are honest, and they they probably don't even, in most cases, I think most taxpayers don't even take full advantage of.
Most people overpay the government.
They overpay. They overpay big
some
time.
people are scared.
Yeah.
Polo and Mobilian. Hi, any tax advice for U.S. expats? U.S. citizens are required to file and sometimes pay taxes on their worldwide income, which makes wealth creation for expats pretty hard.
It's, it all depends if there's a tax treaty between the U.S. and that particular nation. So that always has to be looked at. And then, so I couldn't, it would depend. Every country is different. That's a little bit outside of my scope. I do have a bunch of the Canadians.
Okay.
And I got a couple of Germans, and, so there's a couple of jurisdictions that I'm decent at.
Okay.
But it's not.
It depends on your country. I guess in this case, this guy's in the UK. Are you familiar with the UK? As far as
no, I've only, it's Germany, Switzerland, and Canada, and some countries in South America.
Gotcha. Okay. So is it tougher for them being there as American citizens running a digital, I guess essentially probably a digital business there?
I mean, as far as like
for tax liability purposes?
Well, the UK is horrendous as far as taxes are concerned. I know a lot of UK businesses or individuals that come here to start businesses and they're happy to pay taxes because they get killed over there.
Gotcha.
Yeah.
So as an American citizen in the UK, it might not look good for you. Okay. We got Isaiah McCrimmon, $10. I started as S Corporation to do Uber last October. Was that the correct move?
Absolutely. If you're making over $50,000 and so go with it. Yeah. Okay. That's great.
So the Uber is
smart guy,
especially if you're making over 50K. Yeah, perfect.
Smart guy.
Augie Tanars, question for Steve. Could I write off courses like Charlie's crypto course or DMs on Demand on my taxes under education?
Yes, because there's a business component to that. Was that the course you guys had there?
Yeah, teaching them how to use Instagram to market their business.
Did you have other components in there, the business and all that stuff, like marketing, stuff like that? So yeah, definitely, you could probably argue that one too. Yeah, so definitely yes and yes.
Okay.
Yep.
So fantastic. So yes, guys, you guys can write that off as education. And also, you know what? Can they write off super chats here when they ask questions and they're getting education? Like right now, technically they're getting education.
Good question. I don't. It's possible. Yeah. I don't know. Yeah.
Because they're paying to speak to you, who is a professional in this, and they're asking a question. They're getting education for their own.
It's possible, yeah. I have to look at,
Okay.
That I'm not sure of.
Creativity, baby. We got Ostrike, $5. Why? We just answered that one. Yeah, the 50K threshold, guys, is because to ensure that you're getting the best return on your investment of going
cost benefit
analysis, of filing an S Corp, paying someone to do it for you, etc. I would say maybe if they do it themselves, maybe we could bring that threshold down.
It's possible, yeah.
But let's be honest, most guys, you're going to want someone to do it for you. You might not have the expertise.
When it comes to doing an S Corporation, I mean, you got to buy the software for it, and then you got to know where things go on the line, and it's just it's more hassle than it's worth, I think. Okay, and then we got Pac-Man, Rod Eric. What do y'all think of purchasing a shelf corporations or aged corporation? So, I mean, a shelf corporation, an age corporation, I think you would buy just to get maybe like trade credit. That's the only use I could see for that. It's like, maybe that you're operating in an industry where there's vendors and you have suppliers.
Right.
Where
can you re-ask it and clarify like what you mean by shelf corporation or age corporation?
I mean, from a tax standpoint, there's, which is my area, I don't see any benefit to it. But the only thing I could see a benefit to getting an aged corporation is because maybe there's a certain industry that you're in where they're like you're dealing with suppliers that want to see some
Credit
history
history.
there.
Okay.
Yeah, and you're getting some credit history there.
From what I understand, it's basically like you can use that as a trade line to like get credit for a couple of years that you didn't
I
have.
think it only applies until like the vendors and the suppliers that they want to give you that are related to that industry. Because honestly, if you go to like a bank, they're not going to give you any money. They're going to make you have sign a personal guarantee because that company, they know that's like what they're going to be like. They're not going to give you just, hand out a loan for you, a business loan.
Okay.
Based on that. No, there's got to be assets and collateral there.
Yeah, Rod, just clarify just so we know
Yeah.
exactly, so we make sure we can get that answer for you. Chris, it's Rod Eric with a K at the end, if you see it, the chat. Pac-Man T91. Hey guys, for our show, as a W-2 employee driving semi-trucks, at what income threshold should I hire a CPA? Also, any suggestions for truck drivers and taxes?
So if you're a W-2 employer, I wouldn't do, employee, I wouldn't do a corporation. Yeah, definitely no. No, it only comes up if you're going to have it like your own separate business. There's not much you can do with it with a W-2, other than stack money away for retirement, HSA, like a health savings account or a medical savings account. There, and then you take advantage of all your itemized deductions if you have a house, and you're deducting your mortgage interest and your real estate taxes. There's not much you can do as a W. Yeah, because that comes back to that same scenario with that high income W-2 doctor that's making 300. He's got a W-2. So the IRS already knows that these people are forming these little businesses to get those write-offs, and that's where that lady, she had a $30,000 letter. So that was like a red flag. Oh, here's a high earner. There's not much they can do to get write-offs. So they create these little businesses, these side hustles that produce a loss, and they net it against their W-2 wages to lower their income tax bill and get a refund back.
And that's why she got hit so hard.
And that's like, boom, that's like a glaring red flag. So that's why I don't like that. That's why I like to push them off on an S Corp.
Okay.
Yeah.
So for this guy, he's a W-2 employee. So I guess his other question was, at what threshold should he hire a CPA? 70 grand a year, 100 grand a year?
I mean, it doesn't, just being a W-2 employee doesn't sound to me like a complex situation. It's, I'm honestly not putting myself out of business here.
Yeah.
But
keeping it real with you guys, being honest.
Unless you got an inordinate amount of itemized deductions, which I talked about, where you're giving money to charity and you have like mortgage interest, and you have real estate taxes and some other, and then you're going to be putting money away in some retirement vehicle, like an IRA, typically, whether it's a Roth or a traditional IRA. It doesn't sound to me like there's any particular threshold in there.
Okay.
That's a simple W-2 employee.
Yeah.
With
it's
standard,
easy. Go to H&R Block, guys.
Yeah.
Right? I guess in that case.
Yeah. I mean,
yeah.
Yeah.
I
won't
unless
lie to you. I won't lie to you.
Yeah.
I mean, you can go to CPA because, honestly, some of the prices of the CPA firms, and they do a better job, and you're getting the same person every year, and they know your situation in case things do change.
Yeah.
And things come up. But when you go to H&R Block, you're not necessarily getting the same person, the tax preparer, and they probably don't have as much experience.
Yeah.
So they don't know you personally. And the fee, I know the H&R Block around us or whatever, it's probably very close in fee structure.
Yeah.
For the same stuff. So
I remember when I did mine.
I would just go to a CPA firm.
Yeah.
Because you're probably gonna, you don't have to. You have to go to the huge, the fancy one or whatever.
Yeah.
It's kind of like ours. We're deal with small business owners.
Yeah. When you're an entrepreneur and you're using, things are very, I guess, can be complex. Yeah. You would want someone like you. But if it's like, you're a W-2 employee or a truck driver, unless you have a bunch, can you write things off as you can, right? As a W-2 employee?
Yeah, there's some time, but that goes into your itemized deduction. So you gotta meet that threshold, that $12,400 threshold.
Oh, yeah. So he has, so you you can't even write things off unless you at least
You gotta exceed that to itemize. To itemize.
That's
Otherwise,
a big tip right there.
Yeah,
Okay.
otherwise, just take the standard.
Okay.
You're just gonna get the standard deduction.
Okay, so
in
if you
most
don't-
cases, because the last administration they had raised the standard deduction, so in most cases, right now, what I found is a little secret is where people in cases where people were itemizing before because they were higher than the standard. Once they increased the standard deduction, I want to say it's like over 75, maybe 80% now.
Okay.
Where they were itemizing are now getting the standard because the standard is higher.
Okay.
Yeah.
Interesting. All
It's
right.
huge.
We got D Nice $5. If you sell a car, Steve, does that count as a capital gains on your taxes?
Oh yeah. If you sell it for a profit,
Okay.
not a loss, but you sell it for a profit, that's a capital gain and it's subject to capital gains tax.
So let's run a couple scenarios here. Let's say I buy $100,000 car, and then I sell it for 75,000 or 90,000. I guess we'll just say 80,000. So easy, nice number, right? Over a year later, and I lose $20,000 on the deal. Am I still liable to pay tax on that new $80,000 that I've just made, or am I not?
Now, if you didn't use it for business in that case, then you don't do anything with that. It's just you lost money on it. But if you use it for your business and you depreciated it, so maybe your cost basis now, because once you depreciate something, when you buy something, it's called cost basis.
Okay.
When you depreciate that, the cost basis goes down.
Okay.
So now your cost basis in that, maybe you used it for your business and maybe it's zero. Maybe you depreciated the whole thing. So now it's zero and you go sell it for 75. Now you got a $75,000 gain on it. In that
For
case,
the
if
business.
it's a business, yeah.
Okay. So I got a $75,000 gain, but I can write off the 25,000 I lost.
Right.
Okay. For the business. But if I'm a
Right.
regular guy, Joe Schmo, just sold it because I didn't want it anymore. I want to upgrade. Nothing. I got to pay tax on
personal use assets don't apply to that. Yeah, that's a business assets.
that. Okay, capital
Okay.
gains is only
Yeah.
for business.
Correct for business.
Even but crypto is subject to capital.
Well, those
gains,
aren't personal use assets. Personal use would be like something you buy for yourself, basically. So that's different.
right? Okay.
So yeah.
Stocks too. What about
Stocks are subject to definitely subject to capital gains tax. Definitely.
Okay. Damn. All right. Okay. So just to clarify, so if they do it for the business, they got to pay capital gains tax. If they don't do it for the business,
Yeah, depending on we got to do the math calculation, figure out did they depreciate it, what they bought it for, what's the adjusted cost? They call it adjusted cost basis. You know, how much depreciation did they take?
and they can only depreciate if it's a
And then-
business car, right?
Correct.
Okay. You can't
Correct.
depreciate my
personal
Corvette that I
personal
bought
use. Yeah,
just
because
to
it's
chill
personal
with.
use. That's why
Okay.
I was mentioning personal use. It's like
Doesn't count. Okay.
doesn't count, yeah.
Corinth, $5. Is there any point to always creating your business in Delaware or Nevada, not matter what state you are in? I've heard that a lot from people saying I started LLC in Nevada or
Montana?
random places. Is there?
That used to be a haven for a lot of corporations to form in because it was that was back in the day. But then and some I want to say like Wyoming and Nevada because they have the state doesn't make all the ownership information public. I believe.
Okay, for privacy
So
reasons.
maybe you
Okay.
want it for private. So maybe you want to run a business here and you want it because like in the state of Florida,
Yeah,
there's
your name's
ways
all over the
around it.
place.
It's public. You just
Yeah.
couple of taps, you're gonna find out who owns it, where they live. Or if somebody sets it up correctly, there's ways to disguise that. But yeah, so that would be like one of the reasons why. Plus, also in Nevada, there's like same thing with Florida. There's no state income tax,
Okay.
so that would be a major. But in Delaware, they have state.
They do have state
income
They,
tax. So
they,
there's-
they don't have a sales tax, if I'm not mistaken. Delaware, I think is what it is.
Is it
I
no
don't-
sales tax? Really?
No
Is
sales
it?
sales tax.
Is
So
it?
everything
Okay.
is $9.99. It's $9.99.
Yeah.
I
So
think.
unless you physically live there and you're not, you're not.
Correct me if I'm
buying
wrong in the
things,
chat, but I think there's no sales tax in Delaware. Okay, we got Eyes McCrimmon here. Thank you. YouTube helped. Also, I made some money off cryptocurrency this year, $6,000 plus. I put it under my name S Corp, even though my S Corp is based around transportation and affiliate marketing? ?
So
Is
you
that a
made
sticky
some-
situation there?
So as long as you, I don't know if you did it on a, what is it called? The know your client, the KYC exchange, because then that's going to be reported. I don't know, maybe they could onboard the money in there, like a Coinbase or something like that. But
Oh, so that all factors in.
yeah, but if you do it on a wallet and you sell it, like sometimes you got those exchanges where you're not, like it's not recorded.
Yeah.
You don't have all the information on the personal identity of the
Yeah,
person.
yeah,
So
yeah.
I don't know what the particular
Coinbase, all your info is out there.
That's
but
a whole
there's other
different
ones that-
world. Yeah. That's
Okay.
a very
So it depends. So how he bought it actually matters.
yeah. I mean, I think in
Okay.
time it's probably going to be more regulated, and it's going to be, going to have more exchanges in there. I don't know. I mean, we'll see how that develops, but yeah, I don't know. So I'm not sure the purpose of putting it under the S corporation in that particular instance, and how you opened up the account, and was it opened up in the name of the, when you onboarded your money, did you do it as a business account?
See that all this plays so
there's
many.
a lot-
Okay,
yeah, that's
see.
like that's high level. Like maybe
Yeah.
we got to do a course on that. Maybe
Yeah.
we should
yeah,
there's a lot of research I still have to do in that area too, to be honest with you.
that's
so I'm not gonna
crazy.
sit
So the
there-
way
yeah.
he procures it matters a lot towards his
Yeah.
liability versus buying it on a Coinbase versus another exchange.
It's like, here's what they're doing. Like when we prepare a tax return, we have to check. You have to check a box in there that we interviewed the taxpayer, and we asked them the question, "Hey, Myron, did you invest in? You have or hold virtual currency?"
oh,
So now they're
new,
starting
right?
to
That's new.
yeah. So
That
now
just
they're
came this year.
starting to compile the information, right? So something's coming down eventually it's going to come down where, because you're going to have a lot of these people where, I know like on Coinbase, like that data is going to be reported,
of course. Yeah. Yeah.
So it's like,
Regulators.
because when you have like you open up your Charles Schwab account and you're trading, and then they eventually, because I remember in the back in the day where people would be like on the honor system, you look up your cost basis where like there was no way to track like when I bought my stock, the historical, there was way to figure it out, but there was no way for the IRS really to get a grip on it.
Okay.
So as these investment firms came online and started to comply, and then they tracked the cost basis of the stocks of the buy and sells.
Yeah.
So now we get these elaborate, I get these huge statements with all the transactions in there. So everything's calculated, everything's reported to the IRS, so they know exactly what. So there's no way you get a 1099 composite statement from your broker. Everything's in there. It's all in there.
Can you tell
So-
people real quick what a 1099? We'll finish this and
So,
have tell them what a 1099
so
is. after.
1099 basically is, in this case with the broker, the broker's all the transactions that you have in your portfolio.
Okay.
Your buys and your sells, and your gains and your losses and so forth, and your wash sales and all that stuff gets reported to the Internal Revenue Service, basically. So
And
the
you can give
IRS has that information already in your transcript from the brokerage company. They report it right up to the IRS. So I'm sure in a like something like an exchange like Coinbase or whatever, they're gonna get to that point.
Okay.
I don't know how, I don't know when, I don't know to what extent, because there are those where it's completely anonymous, I guess, right?
Yeah,
Because
yeah.
people like put the
Yeah,
money
there's
there,
definitely ways
then they
to get
move
it,
it to
yeah.
a wallet, and then
Yeah.
they go to this other stuff and they do all this trading. So
Yeah.
who knows what?
Yeah.
But it's all blockchain stuff, so it's all recorded somewhere in the ether. I mean, it's
Yeah.
out there, so
Exactly.
I'm sure there's ways that I don't know. Who knows what direction it's
Yeah.
going to
So,
take.
so the tax laws
big
around crypto
question
are
mark.
still
Yeah.
fairly hazy.
yeah.
Okay. And then anything else, Chris?
Yeah, we got 2 more.
Okay. We got $5 from D Nice. Steve, if CPS if I got CPS notice and don't have receipts, how do I go about?
I got to see, what is that CPS notice? Like an IRS notice, I mean?
It might be, yeah.
I said maybe what is
Or
it?
does he mean a
country?
CPA notice? No.
I gotta see. I think maybe if you got an IRS notice and don't have, I don't know, like what they do is the IRS now.
D Nice, let us know what you mean by CPS so we know
Yeah, I'm not
exactly,
sure exactly
what
what
that
the
acronym
CPS
stands for,
Yeah.
please. Chris will be on the lookout for it in the chat.
correspondence audit. I don't know. Sometimes they ask, like sometimes you get a computer generated because there's red flags in certain fields on a form that don't make sense over the industry. And the IRS will send you a computer generated form, I want to say.
Okay.
I've had that where they say, all right, this is you need to submit all these documents to substantiate that expense that you took on your return.
Okay.
And then to mail, it's called a correspondence mail-in audit. So you just make copies of everything, you mail it in. You don't even get like an auditor coming physically out. It's just like you mail it in, and then they'll send you a response.
Correspondence
later.
notice.
Yeah.
Okay. So if that's what it is, D Nice, let us know. And then we got more M21. Chris, can you go back to that?
Sorry.
Oh, CPS 2000 notice is what it is. Steve.
CPS 2000 notice could, I don't
I'm gonna
know.
look it up real fast.
There's like a that's like a computer generated. I want to say a CPS notice. It's like that stands for like a computer generated notice, and it could be on any number of things.
IRS explains CP 2000 letters sent to taxpayers when tax return information
Doesn't
match information from
Yeah.
third parties. That's what
Yeah,
it is.
so
you
maybe
got hit
like-
with one of those.
Yeah, so maybe there was like a 1099 you had from somebody. Maybe you did some work for somebody, and then they, oh, I made $5,000, cutting grass or whatever for this apartment complex. And they
Mhm.
send you a 1099, and if you don't, a lot of people they forget to report that. They don't report it, and they'll get that notice.
Yeah. Okay. What about? So what should he do then? I guess in this case, he doesn't have the receipts. Is he dead in the water?
Yeah, you're pretty much you're
Damn.
fucked.
Yeah. So he's
well,
probably,
if you did it go through your bank statement? Can you substantiate it? Like, did you write a check for it, or did you use a debit card for it, or a credit card for it? Then you can go back to the statement, because the IRS accepts that.
That's an issue. So
yeah, IRS doesn't really do the receipts anymore because everything's pretty much tracked through your bank statement now.
or credit
So they
card.
take bank statements
So
now
they'll
as
take
like
that.
proof. Yeah.
So, bro, if you use a credit card, if you use a debit card, if you use anything, your Apple Wallet, whatever it is,
Yeah.
and it was a digital transaction to some degree, you should have some kind
Some
of
of record of
proof
it. Yeah.
of it. Use that.
Now,
my
if you
friend.
paid cash for it and you lost the receipt, then you're fucked.
Oh yeah, that is.
Unless you can get your friend to write you a receipt.
Yeah, bro, that's
that could be trouble though. That won't be worth it. Yeah.
So, but yeah, D-Nice, those are some options there. I hope you've used the card to pay for it. More M21. I need to talk about taxation and business. What's the key to high revenue in entrepreneurship? Also, in detail, how do you do taxation on stocks work? Oh, that's a pretty good question.
So say that again.
Okay, Chris, can you please keep up that question because it's a complex one. I need to ask about taxation and business. What's the key to high revenue in entrepreneurship? That's the first question. So I guess we can answer that one. What's the key to high revenue in entrepreneurship?
Key to high revenue.
Yeah.
To making money. You gotta have a good idea. You gotta work hard. I mean, obviously, and then you gotta have
Solve a problem.
Fill a need. Fill a need that nobody else is filling.
Yep.
This is also in
High income skill. And then the second one is also in detail.
How do
Taxation on stocks work?
So taxation on stocks. Well, we got, you got the long-term capital gains and the short-term capital gains. So if you have a stock that you bought and you hold it for more than 12 months, then it goes to
Long term.
to 12.
Okay.
I mean, to long-term, and the tax rates on that are better than they are for short-term, because short-term, you're going to pay what's called ordinary income tax.
Bang.
So that's going to be whatever, they're higher rates. So you don't get that preferential capital gains tax rate from the long-term. And then basically that's it. So you figure out, all right, you got a stock, you buy it at 100, you sell it at 200. Did you hold it for a year? So the first thing we got to determine is how long did you have it? And then you determine from there what your rate's going to be.
Bang.
And then it also depends on how much money. So there's like the 15% tax rate if you're over a certain amount of income total. And then there's a 20 if you're over above. I think it's like 5
it
times.
seems to me just to get from a general standpoint, you're best. So you should at least hold it for a year. You know what I mean? Because it seems to me like that.
It all depends. I mean,
Unless
like
you're making a crazy amount of money.
You're talking about like these people like in crypto or whatever. Like, if you're going to buy stuff low and then you're going to get a huge, snap.
You got to pull the trigger immediately. Yeah.
You're going to make the money when you need to make money, because the timing is everything in the market, right?
Yeah.
So
especially with,
yeah.
So I would say the more volatile the assets, such as cryptocurrency, for example,
you're buying a dips, and I mean that's almost like day trading or whatever.
Yeah,
but
I guess the more likely you're going to be get a short-term capital gain because tax, which is higher. But let's say a real estate property, hold it for at least a year. If you can.
When it comes to
unless you're buying and flipping, that's what you do, because you did that for a while.
I did
right?
that for a while. Yeah.
Okay.
Yeah.
And if you guys want to hear about buying and flipping, we can talk about that too. But let's see here with the other questions. Let's see here.
No.
Oh, and then how detail on how? So yeah, he just told them anything else that they need to know besides capital and short term, with capital long term and short term.
No, it's pretty straightforward. Yeah.
Okay.
From
with stocks.
Yeah.
And then Rod Eric seems like he answered the question. Fresh acknowledged it. It's basically the ability to purchase a corporation business history of 2 years. Must make sure the business didn't go bankrupt though. Yep. Okay. Yeah, we talked about that. And then Isaiah McCrimmon, I bought around $800 of Dogecoin in February, sold on Robinhood in May, which asked how you want to be taxed, but Coinbase didn't ask about how to be taxed. Okay, interesting. Okay, I think we're caught up on all that. And then, Fresh, you got any other questions?
That's it for me, man. Real talk. After this, we need to speak as well, because
I wanted to give him my Instagram, because I have I got a free ebook. Yeah, so you can find me on Instagram. It's a new one. I'm just starting it out right now, but I'm going to give some good content out there. I'm giving a free ebook. It's at Seeing Beyond the Numbers.
Bam.
Seeing Beyond the Numbers. Yeah. So if you go in there and you follow me and you DM me, I'll send you the link to download. It's a great book. I give it to all my clients. And there's a lot of other tidbits in there. Like I have, like my clients, like they're more established. I have them, like, you got kids, hire the kids. Like we take all the tax strategies out. So yeah, get in there and I'll give you a copy of that, especially if you're going to start. It's good for starting a new business. And then I'm hoping that a lot of you guys will, get to a point where you're making more than 500,000 in your business. Because you know, a lot of young guys on that.
Should we give them a little bit of the sauce on what me and you are working on right now?
Yeah.
You know what? Okay, so we're gonna give you guys a bonus. All right, transitioning over. So me and Steve right now are working on a SBA loan for some of you guys that might not know, Small Business Administration. And can you tell them the details of this loan? I think it's a fantastic opportunity that you guys could take advantage of, and I'll give you a little bit of how this even happened. So I was on the phone with Steve talking about some other stuff. And I was telling him, as you guys know, I'm a pretty aggressive real estate investor. I'm always trying to, pick up property, whatever it may be. And I've been losing a lot of deals, guys. I ain't gonna lie. The market is on fire right now. These New Yorkers are coming down here buying cash, overpaying for property, whatever. The Florida market right now is red hot, and I lost a couple properties in Connecticut too, in bidding wars. And then I was telling Steve about this. I was like, these New Yorkers, man, where do they have all this excess cash? He was like, well, did you hear about this loan? And then he just broke it down for me. So can you tell them a little bit about this loan that a lot of people have been taking advantage of?
Yes.
That a lot of you guys that are watching might qualify for. So
yeah, it's basically up until the end of the year, and you can get up to $500,000 if you had a small business. You had to be established in 2019. So basically, it had to be a business that you filed a tax return for your company in 2019. Could be a Schedule C too, as well. So I've had clients that applied for it on a Schedule C, and they weren't an S Corp.
LLC guys, right?
Yeah. So as long as that business schedule was reported on your 2019 return, then you can go to the link on the IRS. I don't know if you guys got it up there. It's pretty, it's a do-it-yourself thing. It's pretty easy. I think it took you all of 15, 20 minutes to do it. You go in there and you answer the questions, you put it in there. So as long as you had a business in 2019, they'll take.
Well, you did it for me, actually, Steve. I put the documents.
Did I do that one?
Yeah, you did it for me. Yeah.
So I did it. Yeah. So it basically in 2019, you take your gross, the top number, and it says right there. If you look on your tax return,
before expenses, taxes, expenses, operating costs. That's your gross, guys. Is everything you made.
And basically you look. They tell you where to go on your line. So it's like your gross receipts. It's a top level line, and then you can get you could double that. So let's say you made $100,000 gross receipts in 2019, you can get up to $200,000 to qualify for, right? So then you answer all the other questions. You go in there and you put in your banking information for your business, routing, account number, and all that stuff. And then upload a couple other documents. It's very easy. So and then it's basically a loan that you can defer the payment on it up to 18 months. It was 24 months last year.
And what's the name of this loan exactly? This one?
It's called an SBA Economic Impact Disaster Loan, and the acronym is the EIDL. Yeah. So if you just Google that, you're gonna get the website.
EIDL.
EIDL. Economic Impact Disaster Loan.
And that, not to be confused with the PPP loan.
No, that's for payroll. That's for your employees for payroll.
Which is a lot of people have been scamming on that one, because that one was not even a loan. It was like a grant, right? They just gave you like
that one. Yeah, basically, I had a ton of my clients to get that one, and then it got forgiven. So you got the money, you're able to pay the payroll for like 8 to 24 weeks on that one, and then as long as you used it for, I think it was like 80% of it had to be used for payroll, and then 20% you could use that on other stuff.
Bang. So so not to be confused with the PPP loan, guys. This one you actually have to pay back. Can you tell them the terms on it real fast on this loan?
So on that one, basically, and then when you start paying it back, it's a fixed rate of 3.75 for 30 years, which is pretty low.
Yeah, which is fantastic, guys. It's like almost like another mortgage.
Yeah.
But if you do it correctly, you can take that money, invest it into something, and make your money back. Because I did the math, right? So I'm going to use it for real estate. I figured out my cost me. Steve figured it out. It's going to be around $600 if I get a real estate property, right, and that cash flows more significant, which you can easily dump that money into a real estate property, leverage, get a bank loan, make cash flow on it. That's going to be more than that monthly payment, and you get 18 months to start paying it off.
Well, let me ask you this:
head start.
How arduous was the closing process for that SBA loan versus dealing with a bank that we had to all those times to give them this, that, and the other thing?
Oh yeah. I haven't closed my SBA loan yet, but it's a lot easier, guys. The process is extremely way easier than doing a mortgage.
But it's the underwriting process is, for lack of a better term, it was a joke. It wasn't even. Like, so you have to upload some certain documents. I did have somebody call on the phone and ask certain questions, and just to verify, that was all legitimate, upload my front and back of your license and a copy of a check for the business or whatever. And and
you did it yourself. I think
I want to say from the time that happens to the time that you get the actual funds, it's like anywhere from 24 to 48 hours. And they get direct deposited right in your account.
Yeah.
And how many can you do in a year, or just one?
Just one per business. But if you got I had a couple clients that had one guy has like 2 car dealerships under 2 different corporations, and he qualified for 2 of them, and he got them.
Nice.
Wow.
Yeah. Plus you got the PPP.
And just keep in mind, guys, you do have to have to pay it back. 3.75 interest rate, which is fantastic. 30 years, and then you can start paying 18 months after the money is dispersed, which is great. It gives you a head start to take that money. Right. In my case, it's going to be like 6 figures, right? Like 120 some. I'm going to take that. I'll tell you guys my strategy. I'm going to take that money, put it into real estate. That real estate is going to give me an ROI, right? A cash on cash return to some degree. And then that money is going to make me profit. And on top of that, I'll be able to pay off that loan, right? So it's like $600. If I make at least $600, now I have an asset that I didn't have to put my money into, right? That's appreciating in value, paying down the debt, and if I get it to cash flow a significant amount, because I'm looking only at property that makes about $2,000 or more net profit, then I'm making an extra $1,400, right, off of other people's money, guys. This is how Robert Kiyosaki, guys that build incredible wealth, they use something called OPM, other people's money, leverage it, put it into an asset, get that, pay back whatever they need to pay back, and then make the profit on top of that, guys. Which is why, when you were fixing and flipping, because you did that for a bit, right? You can use like a hard money lender, get that money fast.
Yeah.
Go and do can you tell them real quick about, so we'll switch from SBA loans, guys. So that's something fantastic to take advantage of. Something that we just thought about, and we're like, man, a lot of people don't know about this. So if you're a small business owner, guys, something that you could think about.
What I did when I was flipping the properties, I got you kind of similar to what you did with this business, is I got the credit cards, and then I would go and do I had a pretty substantial credit line at Home Depot. I used to go there, buy all my materials, everything, do the whole fix up, everything, and then flip it within a certain amount of time before I had to pay that back, pay it all off at closing, and then be done with it. So that was one way. Yeah. What was the other question you had?
Like how, because we're talking about hard money lending, how like a lot of like rehab, like they get that high interest rate or whatever, but they're able to turn it around quickly. Right. Take that money that they gave them, leverage it, put it into something, pay that money back quickly before they get destroyed by the interest, and then refi, get that money out, bang, and then move on to the next.
I mean, I'm assuming that you coming in with cash now is going to put you ahead of the pack of all the other deals, because it's kind of a really competitive market right now.
Yeah. And here's I've lost a couple cash deals. Yeah. I offered cash and I still lost.
So that, oh really?
Yeah.
So they want over, like some people just put like, or like they put like 30,000-40,000 over asking just to make sure that they get the deal. Take it as is.
And that's how this whole conversation started, guys. Because I was wondering, like, yo, how are people getting these deals from me, whatever? Like, because these New Yorkers are coming and buying in, and that's when you told me, hey, I got a bunch of guys that are doing this loan, and a lot of people don't know about it. They know about the PPP one because it's like free and a lot of scammers, but this one you actually do have to pay back. But if you know what you're doing, you put it into a good asset. You don't use it to buy a car, guys. Use it to buy something that's going to create wealth for you. It could be, you can literally take that money, to put it with some of your money, get a down payment onto an investment property. Bang! Now you're making cash flow. You're paying back that debt, which you have 18 months head start on, by the way, guys. And you're making money as well, positive. That wasn't yours. You're using other people's money, man.
Absolutely. Amen.
Everything that we gave you guys right there, a lot of fire right there, man. So Steve, one more time, where can the people find you?
All right. So follow me at Seeing Beyond the Numbers. DM me, and I got a fantastic. It's like a 92-page book on there, and it's an interesting read. It's
completely
kind of
free, by the way, guys.
Yeah, it's not very technical, boring, whatever. It's got some good advice in there, and then just go ahead there and you get that free information.
And guys, the more you know and you can apply, the more you can actually use it to your advantage. So definitely get that book.
Yeah, guys.
Yeah, it's called The Lie About Death and Taxes.
Bam.
So
bam.
It's got some good quotes in there too.
Awesome, man. Hope you guys enjoyed that show. A lot of fire dropped on that one, man. And guys, we'll catch you back for a late night show tonight, I believe, right? Chris? Yep. We'll see you guys back here.
Coming.
Okay, all right, lit. We'll catch you guys back in we'll probably start at 11.
10:30.
10:30. All right. We'll see you guys back in about a little bit over an hour, man. Thank you guys so much. Hope you guys enjoyed that show. Peace.